Hey everyone, hope you're having a great day out there as always. My name is Warren Howe from Facademy, and today we'll be talking about Occidental Petroleum. Yep, ticker symbol OXY, Oxy. Yep. But before that, appreciate if you guys can subscribe to our channel. Yep, smash that like button if you enjoyed this video because if you subscribe, obviously you'll be updated with our fundamental moves, fundamental thesis, analysis, technical analysis, right? This is what gives us an edge in the market. We combine both FATA, FA plus TA. And in 3 weeks ago, we actually released this video called How We Are Hedging Our Portfolios and Strengthening Our Mindset During These Times, right? As we all know, it has been a rough 4 months. Yep, the whole market has been beaten down on mad, fintech, technology overall has been beaten down. So these, in our opinion, because of this crisis, actually turned into an opportunity to hedge our portfolios. Yeah. So suffice to say, we actually did. Yeah, we actually had a cushion in terms of our heavy tech portfolios, and we actually went on to, in my opinion, was a no-brainer play simply because US oil prices were actually going up. UK oil prices were going up. It went from 98 to 125. I think topping to 130 before going down to 114 today. And we actually cushioned ourselves. We bought into Rex International, Hibiscus, which are Singaporean and Malaysian companies, but also US, Devon, ConocoPhillips, right? These, in our opinion, were no-brainer plays. We are fortunate to have 15% return and 20% return so far. But that being said, we also, again, if you guys want to check out this video, the link is below. Do listen to what we have to say about metals overall, inflationary beneficiary stocks, and I'm going to be sharing my watch list as well as to what are the stocks that we personally went in and be looking at as a in and out trade. So we have been very fortunate to be actually hedging onto these plays overall, right? Taking advantage of Malaysian markets and US markets. These two markets has actually been very beneficial. And as we all know, from the past 4 months, it was rough, but it actually been picking back up, and we are no longer in a bear market anymore. It's the Nasdaq, and we actually see follow through day, FTD, another technical term that we shared in one of our videos before. So yeah, we are fortunate. Now, this is actually our watch list so far. Just before we go into Occidental, we have expanded our watch list because some are actually beneficiaries of coal. Yep, met coal plays. Aluminium companies, which is actually a beneficiary of that metal prices actually increasing. Now again, I want to say, and this is part and parcel of why we're actually bullish on Oxy overall. Yep, it's part and parcel of fundamentals, right? We see earnings growth, we see earnings momentum, we follow where the earnings go. You can say that Facademy used to be like a tech heavy portfolio, and we still are, right, for the long run, and that's why we have the 70-30 segregation of our portfolios that we always mention. But that being said, though, there is a way. But before we buy the dip, we need cash to buy the dip. And how do we generate cash and how do we allocate capital is actually dependent on how aggressive we are in actually capitalizing on events, capitalizing on short-term thematic trades, and these, in my opinion, were good trades. Now, just a little sharing before we jump into the fundamentals of Oxy. Basically, we've been looking at aluminium, Alcoa, HCC, which is a met coal company. We have coal beneficiaries and minerals, coal beneficiaries overall. Steel plays, right? So as we mentioned, steel has been going up. Silicon metal prices have been going up. All inflationary beneficiary companies overall have been going up. But the question is actually whether is it priced in and will they continue to go up even further for this year? Now this will depend on the prices overall. This will depend on the average selling price that they've been getting. And this is relative to what I'm going to say about Oxy as well. So earnings momentum has been keeping up, record profits, record earnings for some of these companies. And it's insane, right? So eventually the stock price will... we don't intend to marry these stocks. We actually just want to hold them for 6 months as a thematic play. But overall, these have been our watch list since. We got steel companies, right, benefiting from steel prices going up. Zeus, we got agricultural fertilizer companies going insane, right? IPI. We got marine shipping companies as well. So these are, again, same thesis, right? Earnings momentum, earnings growth. Their PE ratio is actually going down. Forward PE is going from single digits. This is actually the basis. Now, CAR was actually one of the very successful trades that we got after breakout on 193. We actually just realized very, very decent profits. So again, just to share with you on how we hedge, this is what we do to hedge our portfolios from a tech-heavy portfolio, and overall hoping to beat the S&P 500, right? Lockheed Martin is actually defensive stocks, war, military stocks. So that's that. Now let's jump onto OXY. And why are we bullish? Yep. So just a quick one from the investor presentation. The reason why we are bullish is actually, again, the key word here is momentum. Whether it be earnings, whether it be company momentum, we can see that exactly here in this company. Now, I know OXY is a boring company, and in fact, I'm not a fan of oil and gas. I follow earnings. I'm like an earnings whore, right? So I look at the overall company. I look at deleveraging. They've been paying off their debt, right? They still are actually quite a debt-heavy company, asset-heavy company, but they've been reducing their debt, near term to 20B, right? Very, very good momentum here. So as a company, fundamentals, okay, I see debt, I see financials. There's not much qualitative that we see, but actually we'll be talking about that a little bit from these slides. Their 2021 achievements, they have been record, right? Free cash flow before working capital of 8.8 billion. That's huge. Retired 6.7 B of debt. Again, they've been paying off their debt. They have been exceeding their production. Now, when it comes to oil and gas and commodity companies, what are the key factors that we want to take note, right? The key factors is actually we want to know whether or not production is increasing, capacity, right? We want to know the average sales price, right? Average sales price, ASPs, whether or not they can actually get more revenues by not spending as much. That's how it works for upstream companies, right? Because they drill, they produce the oil, they sort of source it, they transport it. That's basically their game, right? These are upstream companies, and upstream companies in during higher commodity prices will get the average sales price overall, which is basically free profits, right? Free profits, increasing margins, and all that. So yeah, multiple drilling and completion. This is one of the bullish thesis. They've been producing more than their guided million barrels a day. Yep, so that's the key. Their fourth quarter performance, just fourth quarter alone, they have generated 2.9 B in free FCF, right? Free cash flow, improving operational performance. Yep, debt repaid and whatnot. So basically, they are again majority of their revenues are actually on upstream. Yep, so record drilling cycle times. Everything about this company is actually improving, operational wise, free cash flow wise, debt wise, and earnings wise, which we're gonna go into that a little bit. Yep. So this is the capital plan. I won't be sharing everything. We'll be looking at shareholder framework, sustainable growth, all these things. This is good. So prioritize retirement of additional 5B of debt. This is the shareholder return or framework. They're actually planning to raise dividends. In fact, during these times, especially a company like Zim, which is a marine shipping company, has been increasing dividend payouts for shareholders, which to me is, I'm not a fan of big dividends, but it's actually confidence as an investor that earnings are sustainable, earnings is more to come. Now that's the risk that we have on commodity companies, because what if the oil prices and commodity prices actually go down? But since we know that, taking an educated guess that inflation is actually here to stay, at least for another year or two, it's actually good to go on this hedge, right? So that's the key. We have financial. So jumping into the financials. Now, they reported diluted EPS of 137, right? For fourth quarter. Full year, they actually have a trailing 12 months of $2, right? $2 in EPS. So what is that? Why am I so bullish on OXY, right? So if I were to actually summarize a few key pointers, here is it. Number one, their guided capacity is actually going to remain the same. Okay, now that is semi-bad news. But the good news is, from 2020, yep, now this will bring me back to their income statement. From 2020, they have been actually they were on loss simply because of an asset impairment. And the average selling price of oil back then was $39. Okay, the average selling price for oil was $66 in 2021, and then they have record profits, record everything, right? Record paying back debt. They are in a financially better situation to do so, and their net income actually was at 1.99 billion as of full year 2021. Revenues of 26. Okay, So 2021, their revenues are already more than 2019. And bear in mind, 2019 was actually a good year for the stock market, for the economy, for oil prices at moderate levels. So this is very simple. This stock and the thesis is actually very dependent on oil prices. And let's say if we take an average of 106, right? Analysts have projected the oil prices to actually reach 120, 130, 150, depending on how the war situation. But if they were to average their 106 per barrel, that would be an extra $40 into their net income and operational profits. So management highlighted that for every $1 increase per barrel, it would contribute $225 million in operational income. Yep. This would mean that potential EPS for the full year will be close to 9B in operational income. Net income will probably, we deduct 21 to 25% of that after taxes and interest. That could put them at a huge, significant increase in EPS. Yep. So that is why I'm really, really bullish on them. So again, when we invest in companies, we want to see momentum. Yep, we want to see earnings growth momentum from quarter to quarter, and we can see that exactly, right? Reported net income, quarter one 2021 was negative, right? Then it shrinks again, and it's positive by a huge mile. Then it's double of that, right? Q4, full year, right, puts them at 1.5 B. But the question is, what is going to happen? What are the earnings going to be in 2022? What are the record earnings? Yep, going to be in 2020. We are yet to see Q1 of 2022, but this is where earnings momentum will pick up. Yep, this is why I'm bullish on them. And so they guided production to be similar. Yep, but they actually have a pre-tax income full year to be 1.7 billion to 2 billion. Now, in my opinion, the management is purely sandbagging. Because as they indicated in the annual report, average prices of oil in 2021 has been $66, as we mentioned. And now this is where we can logically take an educated guess on what will the average price of oil be with all this recession talk, with all this, supply chain disruptions, with all this, shutting down of supply and whatnot, and some countries actually rejecting Russian oil, all these things. What will the average price of oil be within this year? 106 per barrel is actually not very far-fetched. Now we're at 114. On average, 106 is actually not very far-fetched in my opinion. So it's clear that the management is sandbagging pre-tax income, because I personally think they can actually reach to 4B actually, right? Double of what they actually got in 2021. So if let's say it's, just a little bit of valuation, if it's 4 billion, current market cap is at 56, that puts their PE, forward PE, close to around, 12, right? Best case scenario below 10. So again, we follow momentum, we follow earnings, and if you guys are actually, I think what we have been sharing is sufficient enough for you to start your due diligence. Investing further long term into this company will be depending on their status and actually their performance, their progress on carbon value, right? So they're investing across carbon value, which is actually zero emission power. They want to be going more to CO2 capture removals. They want to go clean, right? They want to go cleaner. And this is actually good news for longer term investors. But bear in mind, this is actually a thematic play for us. We're not intending to marry this stock. One of the key catalysts as well is that Big Daddy Warren Buffett has actually invested in this company. He has been investing in this company since 2019 when oil prices were moderate. But his testament, his thesis is that he foresees increasing oil prices. That hence the investment, and that's why he piled on more into his stake, I think the past week or so. Yep. So we've been investing ever since 53, right? Hopefully this thesis plays out. It's actually a big swing that we intend to have. Now let's before we end this, let's look at this a little bit. We are looking at Yahoo Finance, right, on OXY, and average analyst estimates have their EPS at $6. Now that's insane. right? $6 will actually put them close to, well, more than not more than 4 billion in net income in profits, which is definitely more than double, because current EPS TTM is close to 150, $2, but we're looking at $6, which is triple from there, and that's the average analyst estimate, right? So low estimate we got $3, high estimate we got 11, which is very, very far-fetched, right? Very far-fetched. Even $6, in my opinion, is actually very far-fetched. But logically, we have been looking at the numbers, looking at earnings growth momentum. We have this is it, right? So we are, in my opinion, we're still in stage 2 of this company, fundamental-wise and technical-wise. So is this considered a buy before? Prices may consolidate right now, but before earnings go up, which will bring another shorter term catalyst, will stock prices actually go up further, is depending on obviously how they perform and whether or not they can actually reach guidance or increase guidance, because that's where companies will that's the pattern of a great company. They sandbag and they lowball the guidance right at first, and when they increase guidance, their shares get actually more valuable. So this is the play. Now again, hopefully you guys got some value out of this video. We've been talking about OXY, previous trades, how do we hedge against our portfolio. Check it out on YouTube. Appreciate again if you guys can subscribe to our YouTube channel, like this video if you haven't, and I'll see you in the next video. Bye bye.